Welcome to Markets Now. I'm Michelle Rook along with Brian Splitt with agmarket.net, and we're seeing some mixed trade in both grain and livestock futures trade following the WASDE report. And Brian, I got to start off with ending stocks for both corn and soybeans were left unchanged from last month, which is a bit of a surprise considering we had those tighter quarterly stocks. So why did we not see a change?
Yeah, the USDA punted, so maybe their special teams was on the field today. I don't know. I mean, that was the conventional thought process. Is the tighter than expected quarterly stocks should have led to some kind of a revision lower on the old crop carryout assessment. And for soybeans, they didn't change a single thing on the balance sheet. They raised imports on wheat, for example, which I really thought if you were going to raise imports on something, it would have been soybeans, just based on some of the dealings that we've already seen coming into the East Coast, and that it continues to pencil to do that. So my thought was, hey, let's see the old crop stocks reduced by way of additional exports, and then maybe offset part of that with some imports. But they just didn't touch anything, and I thought that was a surprise. With the amount of buying that we saw pre-report, I think the trade has to be surprised too by that, and I wouldn't be surprised to see this soybean market kind of fall under its own weight after not seeing a revision in the old crop stocks. On the corn, really the same deal. You had some small revisions internally in the balance sheet. One category offset with another, but the stocks again remain unchanged there. And again, I would see that as a bit bearish, just based on the expectation of seeing old crop corn stocks reduced. So maybe the USDA is waiting until next month when we're going to start integrating the new crop numbers into this. And they may be a little bit more inclined to start shuffling the old crop as we get a little bit better view ahead of what the new crop balance sheet may look like. And maybe that's when they reduce old crop stocks, knowing ahead of time that these new crop stocks are going to look bearish.
Yeah, although when you look at this number here, certainly cash basis levels for both corn and soybeans are telling you that we've got to be a little bit tighter than the numbers printed today.
Basis and spreads are both saying that it is tight out there. Tighter than what they printed, who knows? I can't count on every kernel of corn and every bean out there, but it's tight. And so we would expect that as we go into delivery for the May contracts, especially if the producer is in the field and they're aggressively planting, we would expect the old crop basis and the spreads to continue to be strong. Typically, you're not going to see much physical movement from the producer as they're out in the field getting the next crop planted. So maybe May versus July into the end of the month for both corn and soybeans, maybe those spreads see some new highs. And again, I would expect basis to be strong to try to incentivize some short-term physical movement while the producer's out in the field getting other things done.
Gotcha. So the other numbers we were looking at today, South American production numbers. In Argentina, production was actually lowered by 7 million metric tons on soybeans. Do you think that was a little bit of a surprise? That's pretty bullish for USDA, or pretty aggressive for them.
I think the problem with these pre-report estimates is always the thought that the USDA is going to be a little bit more cautious than what some of the other agencies have been suggesting over the last couple months, and that's really been the trend. So if you look at where the Rosario Grain Exchange, for example, where they may be for their Argentine soybean crop, they've typically been making bigger, more aggressive cuts than what the USDA has been doing. So there's been a lot of talk over the last month of Argentina's soybean crop being 25 million tons. And the USDA just really hasn't been coming down to where some of the other estimates have been. So I think the trade really believes that we're probably 25 to 27, but just didn't think the USDA would go there. So that's probably part of the issue, is trying to use Kentucky windage for what you think the USDA is going to do versus what the crop actually is. So are we guessing the crop, or are we guessing USDA? But USDA may still be a couple million tons too high on the Argentine bean crop, and maybe that comes to fruition in the next month or two. The Brazil bean crop got a little bit bigger. Big crop gets bigger. And I wouldn't be surprised as we move ahead to see the safrinha soybean or the safrinha corn crop start to get a little bit bigger as well, with just the idea that the crop got planted and is experiencing some pretty good weather conditions at this point.
Yeah, I was going to say, overall, if you want to summarize the South American production going forward, Brazil gets bigger, Argentina gets smaller, or has Argentina hit their low water mark so far?
I haven't seen anything lower than 25 on Argentina beans. So this may be a period in time where things kind of start to stabilize down there. The revisions lower in Argentina should either stop or really slow down. And we should start to see the Brazil crop continue to get a little bit bigger. And maybe there's more strides to be made in the safrinha corn crop than there is in the bean crop at this point. They just increased the Brazil bean crop by 1 million tons. I don't know if it's going to get substantially bigger than that, but I think in the next month or two, that safrinha crop could continue to grow.
Okay. And wheat, as we mentioned, USDA lowered ending stocks by 30 million bushels. And the surprising part about that is how they got there, I think. You mentioned it, but I guess I was thinking if you were going to make a revision, it would have been lowering exports, not doing what they did.
Right. And so they raised carryout by 30 million bushels, not lowered it on wheat. And so they did increase the imports, and they also reduced the feed residual. So the two combined were a 30 million bushel increase in wheat stocks. It's probably a little bit of a short-term setback. The markets seem to be willing to buy the new crop hard red wheat just a couple cents above yesterday's lows. We continue to see just a very poor hard red crop. The state of Kansas is in really rough shape, and it's continuing to look like a drier bias there. So I think you're seeing all kinds of weird spreads going on. The wheat versus the corn, hard red wheat versus soft red wheat reaching record levels near $2 or $2 plus maybe at this point. I haven't seen where it is at this exact moment, but I would think that we should see some pretty good support under the hard red values. And it seems like $8 is support, $9 is resistance, and we're kind of smack dab in the middle here.
You bet. So weather's really the big key here now going forward for the next, month, 2 months, you think?
Yeah, and don't be surprised if there is a rain event that comes through. The wheat can withstand some pretty poor conditions and then come fighting back. So if there is a good rain event that catches a good portion of the crop, I would think that would be seen as bearish, especially if we're in the $8.50 to $9 range. If that happens, and we're at that upper end of the range, I think part of the problem here too is just the demand side of things. We've got a really good looking crop elsewhere in the globe. So if anything, maybe we're going to need to start doing some demand rationing in the U.S. just for domestic usage. But I think on a world basis, there's a lot of other producers out there that have a good crop lined up here.
You bet. So now really the focus in corn and soybeans is new crop, and basically whether we get 92 million acres of corn planted and what we see in terms of soybean planting. So weather's really going to be important in those markets too, isn't it?
It is. So as we really start to shift into the growing season, the percentage of the weighting, I guess you would say, for corn values and soybean values is going to start to shift more heavily towards what's happening on the new crop side of the balance sheet, and less so on what's happening with the old crop side of the balance sheet. So weather is going to be paramount. What we get planted over the next couple weeks. I've had a couple producers in Iowa, give me the sentiment that maybe we could see some record planting pace early over the next 10 to 14 days. So we'll see if that comes to fruition. We've got very warm temperatures this week. So I know a lot of producers are chomping at the bit to try and get out there and get some crop in the ground and possibly have it emerged in the short term, just because we're going to have a lot of growing degree days, piled up here in a short period of time. But yes, we're going to start really, as we get once we get to that May report, which is going to be our first official new crop balance sheet from the USDA, all the focus is going to be on whether or not we're going to be looking at more or less prevent plant than what we think we might be dealing with today. The pace with the crop goes in, and then what the forecast is going to look like for late June and July as we start heading into pollination.
All right. One quick cattle question before I let you go, because I know you're a chartist. We took out the 2014 highs here today and the front month of the lap cattle futures. So now where do we project to, do you think?
Yeah, generally, Michelle, when I use kind of these projection methods on charts, it's in these shorter term moves that are, a head and shoulder pattern or an ascending triangle, descending triangle. All I could really say on cattle is, yes, we've made some new record highs. We've taken out the 2014 highs. I don't know if that necessarily projects to a certain level. I think you might need to look internally at the April live cattle contract or the June live cattle contract to look at some projections within their own independent charts. But I think this cattle market obviously has some very bullish fundamentals happening right now, and it may just ultimately come down to how much the consumer can tolerate. We're seeing record highs right now, so that should tell us that we're pretty high priced. I was just looking at live cattle futures versus lean hog futures, and that's approaching its record premium that we saw back in that 2014, 2015 timeframe. So we're getting to those levels where it's like, all right, are we close? Do we make a high? Does cattle continue to run and maybe hogs start to get supported by it? But I think it ultimately, like I said, comes down to the consumer and whether we have another bout of some kind of a macroeconomic, liquidation event. And that's probably the thing that's going to be the biggest risk for live cattle right now.
All right. Appreciate your analysis as always. Brian Splitt with agmarket.net, and that's Markets Now.